In 2008, the entire world was panicking. Banks were collapsing. Lehman Brothers was gone. The stock market was in free fall. Billionaires were losing everything overnight. Grown men on Wall Street were crying at their desks. And Warren Buffett, the 78-year-old man from Omaha, Nebraska, was quietly writing a check. Not selling, buying. While the smartest people on Wall Street were running for the exits, Buffett was walking calmly through the entrance, and he made billions. Now here's what nobody tells you. Buffett did not do that because he was smarter than everyone else. He did it because 60 years earlier, as an 11-year-old boy, he had learned a set of rules. Simple, boring, almost obvious rules, and he had never once broken them. Not in a boom, not in a crash, not ever. This video is not a biography. This is an autopsy of those rules, every single one, because once you understand them, you will never look at money the same way again. Here is a number that should stop you cold. $140 billion. That is Warren Buffett's net worth as of today. But here's the number that matters even more. He earned 99.7% of that wealth after the age of 52. Let that sink in. Decades of patience, decades of discipline, decades of following the same rules while every trend, every fad, every new get-rich-quick scheme came and went around him. Warren Buffett was born in 1930, the worst possible time to fall in love with investing. The Great Depression had just destroyed the stock market. His own father's brokerage business was struggling. Banks were failing across America, and yet young Warren was not scared. He was fascinated. By age 11, he bought his first stock. By age 13, he was filing tax returns. By age 16, he had already saved more money than most adults. Think of Buffett like a scientist who discovered a formula in a laboratory at age 11 and has been running the same experiment perfectly for 80 years straight. And while everyone else kept changing their formula every time the market moved, the formula did not change. The world did. And the formula kept winning. That formula is what we are here to decode today. Rule 1, never lose money. Rule number 1, never lose money. Rule number 2, never forget rule number 1. Every person who has ever heard this quote has smiled and nodded, and then completely missed the point. Buffett is not saying your portfolio can never go down on paper. He is saying, never take a risk that can wipe you out permanently. Mia Stokes, because the mathematics of loss are brutal in a way most people never calculate. If you lose 50% of your money, you need a 100% gain just to get back to zero, not 50%. Not 60%, 100%. Imagine you are filling a bathtub. You open the tap, but the drain is wide open at the same time. The water keeps flowing in, but it keeps draining out, and the tub never fills. Most investors are filling their bathtub with the drain open, chasing gains while taking catastrophic risks that keep resetting them to zero. Buffett's entire philosophy starts with one obsessive question before any investment. Not, how much can I make? But what is the worst that can happen, and can I survive it? That is rule 1. Protect the capital first. Everything else comes second. Rule 2. Invest only inside your circle of competence. Draw a circle on a piece of paper. Inside that circle, write down every business you truly understand, not just the name, not just the stock ticker, PECU, but how it actually makes money, why customers keep coming back, what could destroy it tomorrow, and what makes it stronger every year. That circle is your circle of competence. Buffett has said for decades that the size of that circle does not matter. What matters is knowing exactly where the edges are. During the dot-com boom of the late 1990s, every investor on earth was buying technology stocks. Fortunes were being made overnight. Buffett refused. He said he did not understand technology businesses well enough to predict their future earnings, and the crowd called him a dinosaur, out of touch, finished. Then the bubble burst. Trillions of dollars vanished in months. And Buffett had lost nothing, and not because he was lucky, but because he had the discipline to say 3 of the most powerful words in investing. I don't know. Most investors will never say those words. Their ego will not allow it, and that ego will cost them everything. Rule 3, buy wonderful companies at fair prices. Buffett's greatest teacher was Benjamin Graham, the father of value investing, who taught him to find beaten down, forgotten, ugly companies that the market had thrown away and buy them at a massive discount. And for years, Buffett did exactly that. But then something shifted. Buffett's partner, Charlie Munger, showed him a different truth. It is far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Here's how to think about it. Imagine 2 food stalls in your city. Stall A sells average food, but today it is 70% off. Stall B sells the most incredible food in the city, always packed, always 5 stars, and it is full price. Which one do you want to own for the next 20 years? A mediocre business bought cheaply stays mediocre. A wonderful business bought at a fair price becomes extraordinary over time. Because quality compounds, reputation compounds, customer loyalty compounds. Buffett calls these businesses with moats, like a castle surrounded by a wide, deep moat that keeps competitors out, and once he finds one, he does not let go. Rule 4. Think in decades, not days. Warren Buffett's favorite holding period is forever, and he means it literally. He bought Coca-Cola in 1988 and has never sold a share. He bought American Express decades ago and still holds it. While Wall Street obsesses over quarterly earnings, daily price swings, and 24-hour news cycles, Buffett is thinking 10, 20, 30 years ahead. The stock market in the short term is a voting machine. It reflects emotion, panic, greed, and noise. But in the long term, it is a weighing machine. It measures the actual real underlying value of businesses. Most investors are glued to the voting machine, making decisions based on fear and headlines. Buffett ignores the voting machine completely and only focuses on the weighing machine. Think of it like ocean waves versus ocean tides. Daily stock prices are the waves, crashing and retreating every hour. But the underlying tide, the actual direction of the economy and great businesses, moves slowly and powerfully and inevitably upward. Buffett surfs the tide. Everyone else drowns fighting the waves. Rule 5. Be fearful when others are greedy, greedy when others are fearful. This is the rule that made Buffett billions in 2008 while the world burned around him. And it is the rule that feels most impossible to actually follow in real life. When the market is crashing, when banks are failing, when the news is screaming that everything is over, every instinct in your body tells you to sell, to run, to protect what you have left. And when the market is soaring, when everyone around you is making money, when your taxi driver is giving you stock tips, every instinct tells you to buy more, ride the wave, get in before it goes higher. Buffett does the exact opposite every single time, and not because he is fearless, but because he understands something most investors never grasp. Price and value are not the same thing. When fear drives prices down, value does not disappear, it goes on sale. And when greed drives prices up, value does not multiply, it gets overpriced. Great businesses on sale during a crash are the greatest gift the market ever gives you, and most people are too terrified to pick them up. Rule 6. Never bet against America through every crisis in modern history. World War II, the Cold War, the 1970s, stagflation, the dot-com crash, the 2008 financial crisis, the COVID pandemic. Warren Buffett has made the same bet every single time. America will come out the other side stronger. He has written about it, spoken about it, and put billions of dollars behind it consistently for 80 years. This is not blind patriotism. This is a calculated, data-driven observation that the American economic system, for all its flaws, has an extraordinary ability to adapt, innovate, and recover. The S&P 500 has survived every single crash in history and gone on to make new all-time highs every single time. And Buffett's long-term investment in American businesses is simply a bet that this pattern continues. Not a guarantee, a bet. But a bet backed by 200 years of evidence. Rule 7. Read everything, every single day. Here is a question. What does Warren Buffett do with 80% of his working day? He reads newspapers, annual reports, financial statements, biographies, history books. He estimates he has read over 1,000 annual reports in his career. When asked how to get smarter, he once held up a stack of papers and said, "Read 500 pages like this every day." That is how knowledge works. It builds up like compound interest. His business partner, Charlie Munger, was the same, famously described by his own children as a book with legs. Think of knowledge like a library that you carry inside your head. Every book, every report, every lesson adds a new shelf, a new tool, a new connection. And when an opportunity or a crisis arrives, the person with the biggest internal library makes the best decision the fastest. Buffett's superpower is not intelligence. It is the accumulated wisdom of decades of voracious reading that allows him to recognize patterns that other investors have never seen before. 4. Crisis/turning point. Now here's where the story gets uncomfortable. It's because everything I have just told you sounds logical, simple, even obvious, and yet study after study, decade after decade, shows that over 90% of professional fund managers fail to beat the market over a 20-year period. Not amateur investors, professional fund managers, people with MBAs, Bloomberg terminals, research teams, and decades of experience, failing consistently to do what a patient, disciplined, long-term investor following Buffett's rules can do. Why? Because following these rules in theory is easy. Following them when the market crashes 40% and your portfolio is bleeding is a completely different psychological experience. In 2000, Buffett was being openly mocked in newspapers and on television. He was called a relic, a has-been, a man who had lost his touch, because he would not buy technology stocks while everyone around him was getting rich. For 3 full years, his fund underperformed. His investors were questioning him. and he did not change a single rule. He sat in Omaha and kept reading and kept waiting because he had been through enough markets to know that the rules work, that patience works, that discipline is the only real edge that individual investors have over the market. And he was right. He was always right. Not because he was smarter, but because he never panicked. 5. Consequences. Why this matters for you. So what does all of this mean for you? Sitting here, not a billionaire, maybe just starting out, maybe wondering if any of this actually applies to your life. Here is the truth Buffett himself has said repeatedly. You do not need to be Warren Buffett to benefit from Warren Buffett's rules. You do not need to analyze individual stocks. You do not need to read 500 pages a day. The simplest application of everything Buffett has ever taught is this. Buy a low-cost S&P 500 index fund consistently every single month, never sell during crashes, hold for decades, and let compound interest do what it has always done. Buffett has literally put this in his will. He has instructed that 90% of the money left for his wife be invested in a simple S&P 500 index fund. The greatest stock picker in human history believes that most people, including his own family, are better served by a simple index fund than by trying to pick stocks. That is not a footnote. That is the loudest possible endorsement of patience over cleverness that you will ever find. If you had invested $10,000 in the S&P 500 in 1990 and never touched it, never panicked, never sold, you would have over $200,000 today. No stock picking, no genius, no connections, just time and discipline, the two things that are completely free and completely available to you right now. 6. Resolution. Here is the uncomfortable truth I want to leave you with. Warren Buffett's rules are not a secret. They have never been a secret. He has been saying them out loud, in speeches, in letters, in interviews for over 6 decades. The rules are free. The books are in every library. The annual letters are on the internet for anyone to read. And yet, despite all of that, the average investor still panic sells during crashes, still chases hot stocks they do not understand, still trades in and out of the market trying to time it perfectly, still confuses activity with progress. The reason Buffett's rules work is not because they are clever, it is because they are almost impossible to follow emotionally. Patience feels like doing nothing. Buying during a crash feels like insanity. Saying, I don't know, feels like weakness. Holding a stock for 30 years feels boring. And yet, every single one of those uncomfortable things is exactly what creates extraordinary wealth over time. The market does not reward the smartest. It rewards the most disciplined. It always has. It always will. So here's the question I want you to sit with tonight. Not which stock to buy, not which app to download, not which fund to pick, but this. Which one of Buffett's rules are you currently breaking? Because I guarantee you are breaking at least one. Maybe you are investing in things you do not understand. Maybe you are selling when the market drops. Maybe you are letting lifestyle inflation eat your investment money. Maybe you are waiting for the perfect time to start. And there is no perfect time. There has never been a perfect time. The only time is now. Drop a comment below and tell me which rule hit you hardest and why, because I read every single comment. And if this video gave you even one insight that changes how you think about money, share it with one person who needs to hear it, because the best investment you can make today is sharing knowledge that actually changes lives. I will see you in the next one.